Welcome to Leaders of Tomorrow, 18-hour special initiative that celebrates the undying entrepreneurial spirit of the micro, small and medium enterprise sector. We are taking all of your queries, whether this come in via calls, on social media or email. And to answer those queries on the panel today, I have Ashish Yafaftia. He's the CFO at Bloom Venture Advisors. And we also have, for the first time, a woman on the call-in show. We have Saloni Narayan. She is a GM of the SME business at SBI. Thank you both very much for being with us here today. That's what our panel of experts is looking like. Let's get started. All right, the first query is a call which is coming to us from Rahul Dogar. Go ahead, Rahul.
What does GST rollout mean for logistics companies from taxation point of view, and what preparedness do the logistics companies have and need to have?
All right, Rahul, thanks for that. It's a very timely question. We are, of course, in the middle of the entire GST debate. So let me start with you, Ashish. What do you recommend?
Sure. So from an overall perspective, GST is definitely a big boost, and for logistics is one of those industries which is going to benefit big time. So when I say benefiting big time, it definitely means that you would not be having to face the challenges that you face today in terms of having taxed in multiple states, your filings in where you are having cross-state deliveries. And at some point in time, we can also expect that the long snarls on the highways for various indirect taxes, including octroi and all that, would definitely come down very dramatically. So a first very objective answer, it is going to definitely mean that you're going to save on taxes. There is going to be lesser time spent on complying with the taxes on the ground by the people who are involved in delivery and the logistics business per se in terms of operations.
All right. So, Rahul, that's in response to your query on GST. Thanks for calling in with that query. Let's take in a next one. And this has come to us on Facebook. Niti Lal has written in to say that she runs a subscription-based model company in New Delhi where one can subscribe to her products. Wants to know if this kind of model is really working in India. We don't see a lot of this. But new age, business models like this seem to be picking up. What would you have to suggest?
I will say that this model has been there in India. The model envisages that the subscriber makes some payment and in return he gets some goods or services. So that's been there. In fact, this has now been expanded. Like you have the cable TV subscription, and you have pay radios, then you have fitness gyms. So this subscription model is very much workable. Only thing is that the product to be selected has to be a product which is going to be used by the customer over and over again. So it has to be a recurring need of the customer. This can be worked out with the product. The right selection of product is very important.
Okay, what would you have to say, Ashish?
So I'm not too sure what exactly is a subscription model. If it is a model which is into content-based subscription related areas, then India has had a history where providers have had to mix subscription revenues and add advertising revenues to this mix as well. And that is not something which has been very easy initially on. Once you attract a certain base of viewership, readership, etc., your advertising revenues also crop up, and it serves as a big booster. But purely surviving on subscription initially in a content-based media in India has been a little bit of a challenge to start with.
That is in response to Niti's query in terms of a subscription-based model and to know whether it's really working in India. Thanks for that query, Niti. Let's take in the next one. This is also a Facebook query coming to us from Rupa Venkatesan. She's written in saying she's a businesswoman, runs a designer jewelry shop. She's again based in New Delhi. She wants to set up her own e-commerce website where she can sell the designs that she makes. She wants to know how to go about that. She also wants to know if it makes sense to go all digital in the jewelry business. And I'm assuming there's some bit also of concern in terms of IP. How do you protect an IP for something that is so design heavy and that's so IP and content heavy? What do you say?
So there are two parts to this question as I read it. One is the part of the question where it says how do you go about doing this business. So it's a vertical commerce business straight away. So there are a lot of vertical commerce businesses in the gems and jewelry businesses that are seemingly doing well, and that has been having decent amount of attraction from both investors as well as consumers. And businesses that are able to have end margins as a decent number are able to scale up rapidly as well. One should not get caught into selling at a very low cost. It's always not the best of strategies, as market is now proving. to go with a deep discounted based model. So to that extent, if you take care of this, it is definitely a great area to work with. E-commerce has its own challenges. Marketing initially, reaching out to your customers is definitely not a very easy thing to do. That requires an upfront investment, which one should be cognizant of. On the second part of the question, would it make sense to have designs online and all that? I definitely feel that protecting IP is something which is not very easy when you're just going to upload designs and have people subscribe on that basis or buy on that basis. It's very easy for somebody to copy that. It's very easy for you to simply lose out people once they have seen the design and other manufacturers replicating it. So protecting your IP is something which is not very easy, and in India it only makes it a little tougher than what you would like.
Let me tweak the question a little bit. Is it a no-brainer that, particularly in the kind of business that she is, consumer-facing, you have to go digital?
I think going digital is not the right option for a person who's starting this jewelry business. Because one thing is that you have to promote your own website if at all you create one. A better option and an easier option is to use the existing platforms that we have in like Amazon, Snapdeal, and Flipkart and Ask Me Bazaar and whatnot. That's one model that the entrepreneur can start, because they're cataloging and becoming a seller on these platforms. Frankly speaking, is very easy. You can just approach these companies. They have their websites, and if the products are good, they are ready to do it, and the cataloging etc. is done by the e-commerce players. So to that extent, I think the work is lessened.
Okay.
So instead of having a website, it is better to go in for this. And secondly, as far as jewelry is concerned, I will say people want to go and actually see the jewelry before buying it. So I will not really recommend a e-commerce model, although you can have a mix of both.
All right, so that Rupa is in response to your query about taking your jewelry business digital. Let's take in our next query, and this is an email coming to us from Richard Lobo. He says he's a textile manufacturer. He's based in Tirupur, and he wants to know before he starts selling his garments in the market, whether he should opt for GST as a single entity for paying tax instead of VAT and CST. And he wants to know, in fact, if that is even an option. What would you have to say to him?
So as it stands today, GST is not under implementation. That only comes up effective 1st of April 2017. Once that comes up, everything moves under that regime, and it is definitely a no-brainer to go for that. As it stands today, everybody is supposed to comply with the old law the way it is. And if you're doing interstate business, then going for CST registration is imperative. So in the wake of it, I don't think it's an answer. It's a question of if or else. Today you do follow the regime that is in practice, and then you move to GST when it starts getting implemented.
Let's take in our next query, and this is also an email. It's coming to us from Mukesh Mittal. He's written in to ask us what will be the effect of GST on local traders and as well as local buyers. So while everyone has been talking about as a businessman, as a businesswoman, GST, what do I do? He also wants to know on buyers, is this necessarily going to mean increased prices, Saloni?
Prices, yes, it will depend on the rates that ultimately is decided by the finally. But I think it will have, for the buyers, it's going to be a big benefit because it's going to be a common market. So the interstate barrier will not be there. Any price which is, any product which is priced at say X in Mumbai will be priced at the same in any other center. So I think this is the biggest gain for the buyer.
And my personal view after having gone through the provisions, at least whatever is available in public domain, is that the way the current law is modeled, it is something which is very big boost, and the framework of the law is more like a VAT based law. So the local buyers only have to gain from this. What it means is that today there are quite a few players in the market who are small and become constrained to reach out to state players who are interstate and all that. Now it becomes very easy for those people to operate as well. So I would definitely see this as a very good opportunity for local buyers or small players to integrate into the mainstream ecosystem. The prices eventually will flow down. The compliance burden will increase, as I've been saying consistently throughout. But at the same time, over a period of time, you will realize that the end consumer will be the beneficiary, and therefore the people will have more business.
Let me take a slightly broader question on GST, since we seem to be getting so many questions on that. There seem to be a lot of concerns now. Do I need to comply? How will I comply? Will there be an increase in prices? What advice do you have for our MSME viewers and for the small business people in terms of, is there going to be, how do they go about educating themselves about GST? How do you make yourself more financial literate when it comes to GST and therefore ensure that you're compliant with every step?
So first and foremost, I think people will have to definitely be familiar with the hybrids on what specific industry they belong to. Indirect taxes has always been a function of the specific industries in which one operates. For MSMEs, whether they are into small manufacturing activities or they are into trading activities, the one important step they'll have to take is engage with their advisors and consultants who today are supporting them. There is, in the current day and age, over the last 10 years, with the spreading of the net, there is a lot of material available. But I would definitely advise that rather than going ahead with simply things which are in the public domain, figure out things which are available from the government registered domains. There is a lot of things in terms of transparency. There has been a model law which they are offering for people to read, and also at some point there will be feedback mechanisms. So people have to find a way to go through their respective associations, the trade bodies, the professional bodies, and be part of that engagement program so that they can be very well versed. Second thing is that there will be a lot of elements which today are not subjecting themselves to tax for various reasons. Either they are not a part of the mainstream, or they feel that the cash nature of the business does not mean that they need to bother about taxes. GST makes it imperative for most people to be compliant. So it will be important for people to understand as to how they can make themselves compliant and be a part of not be anymore a part of a parallel economy in terms of cash and cash operations.
All right, let's take a very quick break on that note. When we come back, we'll continue answering all of your queries, so don't go anywhere. Welcome back. You're with us on this episode of Leaders of Tomorrow, and we're taking in all of your queries with our panel of experts. Let's take in the next query. This is one that's coming to us on Facebook, and do stay tuned. At the end of the show, we'll tell you how you can reach us on Facebook. This one is coming to us from Atul Acharya. He says he's a 20-year-old student and says that despite having ideas for starting up, he finds himself being held back because of the lack of funds. He says he has no credit history, and on what basis, he wants to know, can he get a loan from a bank?
As a startup, I don't think there's any dearth of funds. We have venture capitalists who are willing to take these people on board. Then we have banks who are willing to even provide equity. For instance, State Bank provides, we have a scheme called SBI Smile, where we give equity assistance. So leave alone the loan, we are ready to finance the equity part also. And in terms of loans, lot of things are happening. We are giving a lot of loans below 10 lakhs which are collateral free. The requirement of collateral is not there. It's very easy to get. It's called Mudra loan, and any of the banks can be approached for this, especially State Bank of India. The other thing is that you said that he doesn't have any credit history. So that is better than having a credit default. So for Mudra loans, we don't even consider that. It's perfectly all right to approach State Bank or any other bank to get this loan.
I also want to take up the first part of the question where Atul is mentioning that he has a lot of ideas. So as a budding entrepreneur, as a young entrepreneur, I want to clarify that having ideas is a great thing. Having clear execution plans on the basis of certain research is something which becomes very crucial to get the startup off the ground. Once you have demonstrated some bit of thoroughness in the plan, and that point in time you go and approach angel providers or venture capitalists. At that point in time, they're looking for a clarity of thought. At that point in time, if you don't have full certainty on what the idea is likely to do, how big is the market that you're trying to solve the problem for, or what is the extent in which this can grow big, I think a conventional venture capitalist is going to shy away from it. But that's not the end of the road. There are hundreds and thousands of conventional business that run without support of venture capitalists. And credit has been a big service for these people.
All right, so that's in response to your query, Atul, and wish you all the very best when it comes to starting out on your own. Let's take in the next query, and this one is a call coming to us from Rajiv Handa. Go ahead, Rajiv.
I just wanted to ask when can we expect a growth in the industrial market?
All right, thanks for that, Rajiv. So, industrial market, I'm assuming he's talking manufacturing, and it's closely tied into what's happening in the economy, really. And we were talking about inflation earlier. So, is there a generic answer that you can give him?
Honestly, I think overall the economy has been growing, and when you talk about manufacturing industry per se, there is a huge thrust with the government initiatives of Make in India and the various other initiatives that have been taken over the last 2 years or so. And even before that, the overall industrial activity in terms of manufacturing has been on the rise. It's not that output may reduce, manufacturing activity for a particular quarter may go up and go down. But the overall infrastructure investment that's happening is not something which has fallen or had collapsed. So I think a very generic answer to the question is it is happening today. With Make in India going deeper and the infrastructure getting created, it is only going to be further expanded. So I think that is something which people should be looking forward to.
Since we're talking of the domestic economy, I want to talk about what's happening globally as well. We've just seen the impact that, a Brexit has had, for example. We're counting down to the US election. Should MSMEs brace themselves for that?
If you are an MSME which is catering to the market in India, our population is something which has been a cause of concern, but that's our biggest strength if you look at it. In terms of you have captive consumers within the country, and the middle class has been growing. And with more and more people gaining employment and the youth coming into the mainstream with jobs, qualifications, this is only going to rise. So whether you are a manufacturer who's catering to within India or a service provider who's catering to Indian consumers as recipients of services, I think you have only to look forward to a decent period. Events happening outside of India are not going to be dramatically impacting you. For exporters, yes, these things do matter and they can have an impact on the businesses, but that has been cyclical.
All right, that's in response to your query about the market. Let's take in another query, and this one is coming to us from Aditya Kothari. This is also a call. Go ahead, Aditya.
Can you tell me how should I implement the distribution model for my company? First question. Second, I'm looking for a pro rata basis for my sales staff. That's good, or salary with commission is good? What's more preferable?
The information that we do have is that he's a sales distributor. He's a distributor essentially. He's clearly in a company which is not necessarily manufacturing it, but is distributing products. And is there a thumb rule in terms of having, what a good profit margin or what a proper balance sheet should look like for a business of this kind?
So very honestly, I think profit margins are a function of the industry you operate in. If you are operating in a luxury or uber luxury segment, the margins are going to be much higher. Whereas if you're in an industry which is thriving on cutthroat competition locally or due to imports and all, I think the margins are wafer thin. So the ideal margins are a function of what the average market margins are. And I think long ago we have moved to a model where rather than you have a set margin, people are trying to figure out what the industry average is and manage their costs accordingly. So I would definitely be constrained to say what margin you should charge, but it has to be competitively in line with what your market peers are charging, else you run the risk of running out of favors with your customers.
Aditya, so that's in response to your query. Let's take in our next query, and this is a call as well. It's coming to us from Ravindra Mardia. Go ahead, Ravindra.
Just wanted to know that what the venture capitalist looks for a startup company, especially when they are willing to invest equity in that company.
All right. Thanks for that, Ravindra. Let me start with you and then I'll come to you, Saloni. And you do this day in and day out. Are there top 5 do's and don'ts that you have?
So very specifically, the 2 things that venture capitalists would normally look at least we do follow that, is what is the market size that the team is looking to deliver? And how great is the team today? When I say team, we don't typically invest in very high growth businesses. We invest in businesses which are very early and which can grow very heavily over the next few years of our capitalization. So the initial 2 things which are critical for us is how big is the market size and how diversified is the team in terms of the founders of the team, and how scalable the business model is. These three questions, when they are answered well, and when there's conviction that there's a great market size to look forward to, the business can scale very rapidly with the use of technology, because venture capital is about innovation in some form or the other. It might not necessarily only be something which comes out as a cutting edge robotics business. It can even be an innovative platform or a method of delivering something to your customers, or a small tweak to an existing business model. That's all fine, but it can be rapidly scaled with the use of tech, so far as venture capital is concerned. And the market size visibility today should be looking good over the next 3 to 4 years. It might not be today very clearly existing. There are so many business models that we have funded where markets are not clearly visible, but over a period of 2 to 3 years, there should be some visibility on that. We'll be able to create a dent in that market and open it up.
So let me tweak the question from a bank's perspective. This is what a VC is looking at and looking for when investing in a business or lending money to a business. Is it similar when you're looking at lending to a startup?
Yes, of course, the market is important and the promoters are very important. But the basic thing is the viability of the project.
Okay.
So we will go by the viability. If it is a viable business, then we are game for finance.
Let's take in an email at this point. Abdul Ahmed has written in to us. He says he wants to start a business in the retail space. If I get a loan from a bank, he says, can I alter my loan amount after approval? What are the other means of getting that extra amount for my business if the bank does not revise the approved amount? So, Saloni, let me come to you. So, he basically wants to know, if you've sanctioned, for example, 10 lakhs, is it possible to alter it once the sanction has happened? What advice do you have?
Oh yes, enhancements are permitted. In fact, we have the provision of sanctioning ad hoc limits upfront. So, if it's a seasonal industry, some requirement is there during festival time or some special period, then we sanction ad hoc upfront. For that, he just needs to give an application at the time of the requirement of this ad hoc and avail that loan. And the track record, whatever has been there, say 6 months or 3 months, that should be good.
Okay, so the process of applying for such a loan, is it different from applying for a regular loan?
While you apply for the regular loan, you seek for this ad hoc if there is a seasonality to it or if there is any special requirement 6 months down the line. That can be assessed right away. So that again submission of paper and collection of papers that is obviated, the need for that is obviated.
Okay, Ashish?
No, I think she summed it up well from a banker's perspective, and I don't have anything specific to add to it.
All right, that's as far as your query goes, Abdul, and I do hope that it answers your query in terms of being able to raise an additional amount once the loan amount that you've asked for has already been sanctioned. With that, we've run out of time on this episode. Thank you both very much for being with us here tonight. Do remember that you can always write into our panel of experts with any queries you may have pertaining to your business. The email ID is leadersoftomorrow@timesgroup.com. You can also reach us on social media using the hashtag LOT, or you can call us on that number which is on your screen. Thanks for watching. Have a good night.